The US leads in many areas, but it doesn't lead in all areas. And I think we can take a lot of inspiration, particularly in fintech, from what's happening around the world. If you take insurance, for example, there's probably more insurance innovation happening in South Africa and the United Kingdom than the United States, because the regulatory situations in those countries allow innovation. South Africa and the UK have, over the years, supported insurance companies for women drivers only.
Welcome, everybody. It's Investing for Profit and Joy. And it's the weekend. Not that anybody cares because I'm editing this. We won't say which weekend. And with me today from California, land of the free, home of the taxed, is Ryan Gilbert. Ryan, how are you?
Doing great, Howard. And the home of the tax is looking good today. Crazy times.
Yeah, maybe one day this will be from Nevada. We won't even Zoom. We'll just be next to each other in a casino because it'll be the safest place to operate a business from.
I'm quite sure it will be from Nevada, Texas, or Florida.
They're forcing our hands. But it is America and we get to move. So lucky us. So I wanted today to talk about fintech, specifically your focus. You have we've been friends for a long time. We invest together across the gambit of risk assets, but you have started a new fund called Launchpad. So tell people about Launchpad, then we'll work our way backwards too if we have time.
Thank you. Launchpad Capital Fund 1 is focusing on pre-seed and seed investments in fintech. It's a space that I've been in for the past 22 years. And I really believe that given the growth of the sector and the many opportunities, pre-seed and seed is the space to be. What distinguishes us from other early stage investors is that the majority of our focus is going to be on incubation. We think there are a huge amount of untapped opportunities in the broader financial services sector, going down the vertical of payments, savings, credit, and asset management, and also looking horizontally at the various enabling technologies that make financial services companies tick, from database and storage management through to CRM, security, and also IoT. So we're going to be looking both vertically and horizontally and building companies by partnering with entrepreneurs as co-founders. It basically means that not only are we the first money in, but we're the first effort in. And I'm quite excited about our projections for both return on investment and return on effort. They go hand in hand.
So you and I have traveled the world. You were born in South Africa, yes?
That's right, yeah.
And so when did you move here?
I came here 22 years ago in 1998.
And so the fund will focus on US, but tell like, what do you think having your edge from being around the world and understanding how money works and being in all parts of the aspects and being at Propel before this, which was a larger fund, how will this be different?
Well, I'm focusing on the United States because I think the pandemic has really brought home a reality that, to use a South African term, local is lekker. And that basically means that local is great. If you take the real estate analogy of always investing 50 miles from where you live so you can see the assets, that applies to venture as well. I grew up in South Africa, went to law school in South Africa, came here 22 years ago, have been involved with a number of investments for my Propel fund on a global basis, representing Bill and Melinda Gates on the board of bKash in Bangladesh. I've seen a lot of how fintech has changed lives from the bottom of the pyramid all the way to the top. My key learnings are that a bank account, which is really central to fintech, is basically an address for your money. If you don't have a bank account or an account with one of these neo or challenger banks like Square, no one knows where to send you money. If you have a job, how do you get paid? Does it have to be cash and cash only, which isn't a reality in today's world? And the concept of electronic payments, access to credit, ability to transact electronically in an online environment has become all the more important globally. We're seeing some very, very interesting trends. For example, the high rise of Facebook commerce in Pakistan, India, and Bangladesh, which is only starting to hit here in the United States. So my international exposure, the work I've done globally, and the commitments I have on an international basis do help me inform a little bit about where the trends are going. The US leads in many areas, but it doesn't lead in all areas. And I think we can take a lot of inspiration, particularly in fintech, from what's happening around the world.
This episode is presented by Masterworks. My wife Ellen and I are longtime contemporary art fans, having collected contemporary art for 20 years now. So I was thrilled to have Scott Lynn, the founder of Masterworks, on the podcast to explain the fascinating art world and how exactly this industry operates. The art market allows us to think about diversification and fractional ownership in such a unique way. This is an amazing industry that remains uncorrelated to other investing classes. Every investor will enjoy listening to this episode, I promise. Head over to howardlindzon.com/masterworks to give it a listen. The link is also in the description of the video.
If you take insurance, for example, there's probably more insurance innovation happening in South Africa and the United Kingdom than in the United States, because the regulatory situations in those countries allow innovation. South Africa and the UK have, over the years, supported insurance companies for women drivers only. And I think that's a brilliant approach to underwriting. It's positive discrimination in that regard, because data shows that women drivers are far better than men. In that case, if you have an insurance company for women, they're going to pay lower rates. I wish the regulators in the United States would see that.
And so you like this insurance sector, but you're open at Launchpad to do more than just insurance.
That's right. We're doing broad-based fintech. So we're focusing a lot on payments, on credit, wealth management, insurtech, and real estate tech. The central elements for me would be that this has something to do with your money and your savings and your spend. But we want to find businesses that are heavy on data and heavy on tech. So more the tech of fintech than the fin of fintech. The fin of fintech is getting the right licenses and partnering with the right banks. You don't need a venture capital firm and an incubator to guide you through that path if you're a founder. But the development of the technology moat that's going to give you this sustainable advantage over competition, that's really important. And that's where we've been spending a lot of our time.
So when do you think fintech became super interesting? I mean, I know you've been doing your whole career, but when did it hit this hockey stick, or is it just because of the cloud? You know, from your experience at Square, you saw it early through Jack's partner, I think. So talk about like what that ride's been like, or how fintech has changed.
I think fintech became hot in May of 2009 when Jack Dorsey and Jim McKelvey set out to create what is now known as Square. It was one of the
not because of the iPhone. It couldn't have happened without the iPhone, no, because it was a little dongle for the iPhone.
There were three things that happened, in my opinion. Firstly, we were coming out of that financial crisis, the 08-09 financial crisis, and very smart engineers became a lot more aware of the impact that technology could have on creating a better financial system for all Americans and globally. The second concept was the advent of the iPhone. We were there in the early days of the iPhone, and what the iPhone allowed was massive computing power at a very, very small size scale together with the dongle. And to Jack's and Jim's credit, and I don't think anyone's going to dispute this, they figured out that you could send the magstrip transaction data through the jack, the headphone jack on the iPhone, and then use it as an input device. And
was that not Jack? That was your
Jim McKelvey, who's working with me on Launchpad. Absolutely, he came up with that. He is the engineer that led the team, and together with Jack's brilliance in marketing and user experience, developed Square. And it's fascinating because
it came out, you were advisor early, so you just have written it right from the beginning.
Yes, I was very fortunate to be one of the first advisors to the business.
Do you remember what the first raise was? Was it a small amount, or was
it was a small amount? I think I recall it was a 40 million pre-valuation.
Most firms. That at the time, that's crazy, right?
Well, but this is the guy that could send a strong message in 140 characters. That's Jack Dorsey. Yeah. And the guys were running around with a first presentation that's widely available on the internet today, which gives 140 reasons why we were going to fail. And that I recall sitting in an investment meeting at Venrock amongst other firms and looking around the table. It was really the first time professional VCs were told by the proprietors of a business why they were going to fail. Yeah. There's an unbelievable sense of transparency and honesty that is central to what Square is about. And Jack and Jim have it.
Who do you think wrote that deck?
Definitely Jack.
Okay.
That's Jack.
Okay. And so did he have a beard at the time?
No, clean shaven.
So fintech, that really did. I mean, I talk about this all the time. I just missed it because, and it's all my fault because the naysayers were like, well, it'll never grow beyond, I guess because of the valuation. Well, it'll never grow beyond America. Has it grown beyond America, and how's that mattered?
Well, firstly, it hasn't mattered because America is so big, and that's what we all remember about America and love about America.
I think this goes to your fund. Like we have
exactly.
to
this is America. But to answer the question on Square, Square has gone big. It's big in Australia, New Zealand, big in Japan, big throughout Western Europe. There's been combinations, and there are a lot of copycats. But what Square did, and that's why the naysayers were wrong. When you look at new markets and opportunities, focus on how you can grow a market, not gut a market. The Square focused on these very large pool of underserved sellers. Let's not even call them merchants. It could be the flight instructor who Jim was using to get his pilot license. It could be sellers at local markets. These are merchants. These are people that are selling things, and that really lit the fire and helped this company and many others move up the value chain. It is remarkable when you look at the market cap in financial services, how it's ballooned over the past decade. And the large banks and big players have got bigger. They're a lot more valuable as companies today, but 25% of that new market valuation, let's call it the balloon, is dominated by new entrants on the public markets, companies like Square. And look at PayPal. That company has massively expanded over the past decade as well, benefiting from the same trends. Now, sometimes PayPal is later to the party than Square is, particularly in the crypto space where they've just...
And Venmo, well, Cash App was after Venmo, so okay, so they go back and forth.
Yeah, they do. And when I look at this, I strongly believe that engineers looking at financial services are recognizing that this is a very exciting space to get in, that a bank account is an address. An address can be digitally maintained and distributed and give you access to your cash and savings opportunities wherever you go. And I think what the pandemic certainly has done is accelerated the growth of broad-based financial services. We see that with companies like Square and PayPal. The concept of a brick and mortar financial institution, well, who needs it anymore? I can't even walk into some banks around where I live in the East Bay of the Bay Area because they closed. So come on, when the bank's closed, you still need to get your money. If you've got a safe deposit box at some of these institutions, you've got to make an appointment to ask them to open the bank so you can get into your safe deposit box.
Didn't even think of that. Didn't even think. So how do you keep the passion for writing a $500,000 check when you've seen Square do what it's done? What is the trick?
I'm so excited about new things. I'm not a copy and paste guy. My clear investment thesis, if somebody else is doing it, invest in what they're doing. But when I find opportunities that nobody else is building, I want to go in with the fund as being a co-founder, where we have a share of the common equity at the time of incorporation of the business. And then we follow on with checks in the $500,000 plus size all the way through. And later stage deals, we can help our LPs support through special purpose vehicles that we can put in place. But I feel with our enthusiasm and knowledge and experience in the space and a deck of 20 advisors who are very well immersed in the financial services ecosystem, we can help new entrepreneurs and repeat founders give a real great effort at a huge opportunity. And that's exciting.
And so what are the products today that are the most intriguing, do you think, around outside of Square? Obviously Square, even though I don't use it, Square, there's Venmo, which I use. In terms of neobanks, where do they fit in? Are they bigger than people understood, or and so completely misunderstood, and we'll see more innovation there? Or is it what else besides insurance is interesting?
You got to think about the technology companies in fintech, and I think kudos to my friend Jason Gardner and Omri Dahan at Marqeta. They have built an absolute winning machine. They've made the issuance of cards a lot easier, both physical and digital. And they've done that understanding how technology works and leveraging the full tech stack and APIs. Stripe similarly has performed phenomenally well in that space. Our mutual friend Woody Levin at Extend, he's turned around warranties. When he pitched me 19, 20 months ago on Extend, I said, another warranty company. And he said, my friend, invest. I'm glad that I did.
Oh, you invested. Okay. Yeah. I had him on my podcast. He's doing great.
He's doing great. He's just hit 100 employees. And he's redefining what warranty products are all about. And we're not talking about home warranties, which are these rip-off products when you...
No, Peloton. He has a Peloton account.
Peloton. And I've got a Peloton, and one day I'm going to have to use that warranty. It's clear that's going to happened. Without doubt, physics will demand that. There's a significant amount of opportunities also in the broad-based insurance sector. We speak about underbanked or underserved consumers in the United States, but this country is unbelievably underinsured. And I'm very interested in ways to develop tip-of-spear, acquisition-centric products in the insurtech space that can allow the platforms to create a new USAA, a family-based service based on trust and insurance, where with a straight face, you can tell your customer, these are your gaps, this is what you need, we're going to help you fill them, and rest assured.
So won't USA is a great company. I luckily get to use it through my father-in-law, or my wife's had it forever, and it just seems to work. Or it just doesn't seem to be a nightmare. Luckily, I haven't needed to have insurance. Are those companies going to be able to be competitive the way they're I mean, obviously they have the capital base, but like, will there be new insurance companies?
I'm seeing it very clearly today. Through Propel, we invested in Hippo. We've got Harmonic being incubated through Launchpad. And these companies are super successful because their costs of doing business are way lower than the incumbents. They have lower cost of acquisition because they've understood better ways to acquire customers through direct to consumer on social network, content-driven strategies and partnerships. And also they're focusing on ensuring the actual needs that customers have today. If you have a look at the average home insurance policy in the United States, it insures things like fur coats. I don't know who's got a fur coat anymore, therefore why insure it? Why is it even on the policy that is currently approved by the regulator? So when you strip out the fur coat and add in an iPhone, you've got a policy that's going to make a bit more of a difference to you as the customer, and you're going to gravitate towards those products. You're going to trust those companies because you understand they know you better, and then you're going to buy more things with them.
Well, you and I like to experiment, so I would say we couldn't end this without talking about financial innovation as it goes around just capital. So yep. The term SPAC, when did it become interesting to you, and how have you wrapped that into how you're thinking about the new fund?
Yeah, thanks, Howard. I've been following the special purpose acquisition company space for about 10 years. A friend of mine used to run a hedge fund focusing on healthcare SPACs. So he taught me a little bit about that, and it was interesting to follow through. But about 4 years ago, Betsy Cohen and Daniel Cohen from the bank called Bank started reforming SPACs and redoing the way SPACs were issued in financial services. I had an opportunity to join the advisory board of a SPAC that combined with a company called Paya a couple of months ago. And in August was fortunate enough to partner with the Cohens to bring a very large SPAC to market, a SPAC called FTAC Olympus, where we raised $750 million and are currently pursuing partnerships for appropriate combinations. And our fund, Launchpad Capital, will be partnering with our LPs to invest in those early stage SPAC opportunities too. I think that they are going to be central to driving fintech innovation, particularly leveraging the information and the knowledge and network that we bring, but also being in a position to be a next stage of financing on the growth path and the financing path for so many of these companies. We have to be innovative, not only in the companies we're building and the markets we're serving, but also in the way that we're financing these companies. And I'm excited to be in sponsorship with one of the leading SPACs on the market today, size-wise and focus-wise. And also, we're in a space that we've gone and been very innovative about the structure of the SPAC, the actual promote element. The promote that we have is known as a staggered promote, which is earned as the enterprise value of the business evolves and goes higher. So it really drives full alignment between the SPAC sponsors and management, as well as the insiders at the companies that we're seeking to partner with. It's that philosophy that I'm applying all the way through Launchpad Capital at an early stage, through the late, and particularly relevant at an early stage. I recognize that there's going to be the founder who comes to us to say, you know, Ryan, I've got the deal. I don't really need the incubation and the IR process. And my response is, you know what, you're doing something great. We want to back you. We'll write a small check in to you through the seed element of the fund. But there are going to be those founders that we're very confident about through our network who want to be the IR, want to work in our office, and want to partner with us. And that's where we're going to win.
But part of the innovation that I'm noticing too, and maybe this will, you know, I'm hearing about crossover funds, and you know, I kind of was doing a crossover fund as a hedge fund, and it was just a headache. But I think the way you're talking about it is Launchpad will have the ability to participate across, your focus is here, but you'll have the ability to not say no or participate in something like a SPAC if you can create
Right.
it.
We want to say yes to the right opportunities that are going to return capital to our LPs. I and other members of our team are large participants in this fund. So this is us investing with friends, to use your term. And we have to be in a position to know what our focus is, but also to know that when you have to reach and expand into a new space because the opportunity is the right opportunity, take that shot. That's how it's going to make a big difference.
All right, buddy, that was fantastic. I mean, fintech is a little bit, the buzzword. And so to hear, a little more explanation of, there's the finance part of it, and then there's the tech part of it, really helped. And that was kind of the goal. So congratulations with Launchpad. Obviously, I'm full disclosure an LP, and I'm excited to work on some deals together.
Thanks, Howard. Thanks for all your support over the years, and much appreciated. Have a great weekend. Be safe on those roads.